Hi guys, welcome to the honeystocks.com video today, which as you can see is really just a stock analysis of the stocks that you guys have requested over the last couple of weeks. Apologies for not responding to everybody individually, emails, messages, all my social media platforms, but most of you that follow me closely will understand that I've been enjoying the French Riviera and I've just not really been bothered to respond. But I'm back, so hopefully you get a bit of insight to this. Now, I've got, as always, a few stocks that I think you should add to your watch lists for the weekend running into Friday. Now, please pause the video, make sure you're comfortable with that before proceeding any further. Basically says that if you don't know what you're doing, if you are going to be acting on any of these charts, it's highly recommended that you do not do so, because this is just information purposes only. There's not any investment advice and all that noise. Now, again, I'm registered with the CMT Association. Technical analysis is what I'm widely known for. I'm working my way towards my chartered status at the moment, taking my exams and all the rest of it, all the boring stuff that you don't want to know about. But if you're out there and you are struggling really badly, maybe you feel like you're being knocked out, chewed up, spit out, I know the feeling. You can maybe stick around for a minute at the end, might be able to do something to help you. If you like this, please subscribe to our channel. Down in the bottom right hand corner there is a subscribe button. We would love to have you. And for those of you that maybe are not aware, over the last couple of weeks we've announced that we are making our charting, our trade ideas, our charting research available on an annual subscription basis. We're not doing any monthly subscriptions, it's too much hard work, but if you're interested in an annual subscription, feel free again to stick around for a minute at the end. Now, let's just get into the charts, which is why you're all here. Now, where I really want to start is just quickly with the overall market. I think what we have here is we're very, very close to getting a confirmed breakout in the Dow Jones Industrial Average. Now, I think it is widely accepted that this is the key level in the Dow. It looks like we're going to get a confirmed close above this level, provided there's not any upsets on Friday. I think that is certainly not a bearish move for the market, so I think we can be bullish there. I think the S&P 500, again, been very consistent with this chart over the last couple of months. We've now got a confirmed breakout in the S&P 500. This is a place where we want to be buyers of stocks. That there's no two ways about it. We just need to be identifying the areas of the market that we want to be buying. It's no good being attached to your own individual little stock and hoping that it's going to rise. Sector rotation is very, very real, and it really does pay very, very well to understand this and know where to look. Now, the Russell 2000, again, looks like we're getting a breakout here. It's stalling a little bit, but there is a logical 10% upside. Now, I'm just going to quickly touch on sectors for a second, okay? Now, I just touched on it a second ago about sector rotation and how it's very, very real. Now, a couple of days ago, I presented this chart to my client group, and as we can see, we've had a confirmed breakdown in XLU. Now, what that means is that utility companies are probably going to take a little bit of a beating here. Now, I'm going to talk about a couple of those utility companies shortly, but this is something that you absolutely want to be considering. Also, if you're out there and you are heavily invested in financials, for example, we're talking about you guys that are maybe into JP Morgan, Goldman Sachs, Bank of America, Wells Fargo, the list goes on. What you need to understand is that the financial sector is now pushing up against resistance dating back to 2007. Now, all of those financial stocks have done very, very well and worked very, very well over the last few months. Long may it continue, but the stocks that I've highlighted as buys over the last few weeks, like I said, the JP Morgans, etc., you need to start thinking about what you want to do in the event that the market does meet a brick wall here and it does not advance beyond this level. I think if we get an advance beyond this level with XLF, absolutely look to buy financials, compound on your positions. The list goes on. You would want to be buyers of financial stocks, but I think it makes a lot of sense at the moment. If you're out there with financial, a financial kind of, what's the word I'm looking for? Exposure. There we go. Finally got it. If you're out there with a lot of financial exposure, absolutely just be aware of this chart because it's super important. Now, onto the individual stocks. Carol, I know you were asking about Apple, so I've included it in this analysis for you. Now, Apple has obviously performed incredibly well. I think that this level here is key for Apple. I think this is a logical area. If we were going to meet resistance, this is where you would potentially expect it to happen. Doesn't mean it's going to decline. It could move sideways for the next couple of weeks. That's not a bad thing. I think what we just have to accept is, with a stock like Apple, if we look at how the momentum has performed, it's quite high at the moment, so you'd expect a little bit of a pullback. But we also know that momentum RSI above 70, that's a characteristic of an uptrend. So we're in an uptrend with Apple. It just makes a lot of sense to me that if you're out there, you might want to just pay a little bit of attention to this level, especially if you start to fall away and we get a rejection. That might be a point where you might want to consider just saying thanks very much, Mr. Apple, and let's either buy again on a breakout or wait for any significant dips. That just makes a lot of logical sense to me. Cloud-based tech stocks, guys that are asking constantly about the cloud tech. I understand that it's very difficult. Like I said a few weeks ago when I did a video just purely on the tech stocks, because I knew that there was a lot of distress in the messages and the emails that I was receiving. I don't see a lot has changed, unfortunately, especially with Twilio. I think with Twilio, I think this is a logical level to look for the next support level. Now, I'm not saying that it's going to 75. I absolutely hope it doesn't go to 75. But I think for me, it's very difficult to present a bullish thesis on Twilio when we're in such a bearish environment. We just need to add in the 200 moving average, the last line of defense really for trend followers, and we can see that we're obviously trading well below. We're in a very clear descending trend line. We've had a breakdown, so that there's nothing really here that says that we're bullish. I might consider my thesis if we break that trend line and it starts to move to the upside, but again, I would want to see that 200 MA to clear for Twilio to be a buy. I think just to go back to what I was saying before about the sector rotation, all we've seen cloud tech absolutely massively outperform the market over the last 18 months. All we're seeing a rotation out of that area of the market. Financials have been moving of late. Semiconductors have been flying. I think that's all we've seen. I just think we've seen a rotation out. There will be a rotation back in at some point. I've got absolutely no doubts about it, especially in a trending market. But for those of you out there that are holding on to these stocks, I do hope that you're holding the stock. I hope that it's not options that are causing a lot of problems for you. But yeah, I mean, this is obviously the technical view. If you've got a fundamental view and you love the company and, hopefully you can hold it in there and hopefully it blasts back to previous highs. But naturally that could take a bit of time. Now, Nike is a stock that I've been asked about a lot. I think the level that we need to be watching here is around here. I think if we break below that level, it just no longer becomes appealing. To the flip side of that, though, there is a potential for a bearish pattern that's forming at the moment. So if we can remove that bearish pattern from the Nike dilemma, then I think we could probably be bullish on Nike, maybe around 91.50, maybe 92. That might be an area of interest that you might want to consider. TJX, for those of you that don't know, I have a position in TJX. This was a chart that I posted to my trading community, and it's often performing and it's doing as expected. I am mindful here of the level around $61 now. But absolutely my hope is that we breeze through this level. We've had a confirmed, what looks like a confirmed retest, and so got to be bullish on TJX. It's not offering an optimal entry at the moment whatsoever. We're clearly in the middle of a range. That's not somewhere you want to be buying a stock on a technical level. So for those of you out there, this may be one to watch the earnings to see what happens, and perhaps revisit it post earnings. Again, Caterpillar, this is a chart that I posted to my guys when we had a breakout here around 135. It's obviously performing very, very well. And we are just currently moved stealthily just beyond a key area of potential resistance. It didn't actually offer any resistance, which is good. And absolutely with the expectation, I would expect Caterpillar to kind of chop sideways for a few days, but ultimately I do expect this in an advancing market for this to start to move towards 160, at which point I would obviously reevaluate my thesis on Caterpillar. Activision Blizzard, I believe, reported this evening, and I think that'll have a knock-on effect naturally for Electronic Arts, both gaming stocks. So I think the area of interest with EA, I think above $100, I think breaking out of this symmetrical triangle pattern is what you would be looking for. And I do have to say, I'm not 100% bullish on EA. I think $100, yes, but as we're filtering into this narrow end of the triangle, I think if we get a break to the downside, happily short it, or take puts, whatever your chosen method for profiting in the market is. I think EA will be offering opportunity in either direction very, very soon. I had a bit of a back and forth with a rather rude chap on Stock Twits this week, and we had a bit of back and forth on Match, and I think looking back, I think we're both correct a little bit. I think what my thesis was, you've got a breakdown below this level, you're bearish. That bearish move played out. We had obviously earnings, it moved down. It does look like it's had a decent recovery here. I think that the one thing that I need to maybe just throw out there with a play like this and with Match, especially moving into earnings, it's always a gamble to take a position in the lead up to earnings. Unless you have a robust option strategy, you're gambling. There's no two ways about it. There's no debate about it. You're not trading. You're effectively playing the Vegas odds. Your odds of being profitable over a period of time are just not with you. So what you need to do is implement strategy. And I think with Match, I think where I'm coming from with this chart is above this level here, I first to say, let's take a buy position in Match. Below this level, you cannot be bullish on Match. That's just the technical view. But for those of you that have ridden through earnings, you don't have to have the heart in the mouth every single time you have an earnings report. There are very logical ways that you can play earnings reports. And that's my view on Match at the moment. PayPal's very, very similar. We're obviously in a triangle pattern, descending triangle pattern. This would be the level here that I would be concerned about. It does look like it's starting to make its way back to the lower end of this level to test the support. But again, I'd be happily bullish on PayPal if we can get a breakout above this level here. That just makes a lot of logical sense. Been asked about Zscaler, and this is one that I've chatted actually privately with a lot of my clients about this week, and this is really the way I see it. We've obviously had a huge decline in the stock, $90 down to 40. The thing's been beaten to death. Stands to reason with any good company that it's going to find a bottom at some point. Okay, now I'm not in the habit ordinarily of bottom hunting. I think it's a very risky strategy. I think it makes a lot of sense to buy stocks that are demonstrating strength, breaking out, high probability pullback environments. That's just the way that I like to do things. But I have been asked about it, and there is an argument to be had here that yes, potentially found the bottom. I think that thesis would be proven incorrect. Obviously, on a move below this level, as we can see, more pain level. So that's the way that I'm looking at ZS at the moment. And I would never advocate taking any large positions in this. Absolutely not. I think the way that you would maybe want to play it is if you are out there and you do like to fish for bottoms. It seems really funny to say it like that, actually. But if you're out there and ZS is appealing to you on a fundamental basis, you might want to consider scaling in a quarter position and with a view to scaling up and adding more position size if your thesis is proven correct. Again, we've got a bullish divergence here, so that's part of the thinking as well, that we may have found the bottom. But what we know about divergence is quite often they are just short-term counter trend moves, so it's just as high a probability that we get a full-on breakdown and a lot of distress selling. So you need to be very, very conscious of that if you're out there and you're in ZS. Viva Systems, again, it's about understanding where the danger zones are on the chart, guys. I think this is the level for me where I would be, very, very concerned if it broke below that level. I mean, it's a concerning chart at the moment anyway, just in terms of the whole cloud software tech landscape. It's not terribly appealing at the moment. But that's the view on Viva at the moment. eHealth, one of my clients this week on this particular chart made $80,000 US, and the reason for that, entry lower end here, rode it all up with stock and options, and profited $80,000, which is obviously a hugely significant amount of money. However, given the chart, and my feedback to my client was, look, I don't know if you necessarily want to sell just now. I think you can hold on because I do see a lot more upside potential with this. I think if we can just break beyond this $75 level, that's a level that would hold a lot of interest, and I would see that going to 82. So that's kind of the way that I see EHTH. Ultimately, if the sector and the stock continues to perform and there's not any adverse news events and all the rest of it, I ultimately actually see it going back to 110 if it can break through these two levels. I think above 82, I think it's a clear run to 110. But absolutely, if it's a chart that you like, then absolutely do your own due diligence on it. Amazon, again, I've been asked about this a lot. I've actually, again, had a bit of back and forth with one of my clients this week about Amazon because he is bearish on Amazon, whereas I'm not so bearish. very, very neutral, but more bullish than bearish. School of thinking with that is, if we've got an advancing market, it's very difficult for me to envisage an environment where the market's breaking out into new highs and Amazon isn't along for the ride. That's part of my thinking. The concern I have is this 200 SMA. Now, I think above it, then, absolutely I see it going back to $2,000. The problem is that we're kind of stalling here at the moment. Now, whether this stall is short term, long term, before a complete meltdown, who knows? But I think this is the key level to watch at the moment. If you're out there with Amazon, I think the 200 MA is an area of interest if you're technically minded. Again, if you're fundamentally minded, that's okay as well. Long may the stock rise for you. But that's a level that I would be watching with a lot of interest with Amazon. Those of you in Shopify need to be really careful. I think if you are bullish, if you've got any significant position size in Shopify, if you're technically minded, I would be watching this level with a lot of interest. I think this is a very clear danger zone for me. I highlighted this a few weeks ago and I said this was a big concern. I said the 50-day simple moving average being rejected, and lo and behold, it's come down, it's retesting this level. Now, what we know about stocks, the more times a level is tested, the more likely it is to eventually break. And this is the third test of this particular level. So in my book, this is absolutely an area that you want to be observing with a lot of interest. I don't see the point in taking a lot of chances. How far it could potentially drop, who knows? It could be $10, it could be $100. But the key is that there always has to be a point between where the stock currently is and zero, and you need to have an exit plan in place. If you don't, that just isn't cricket. That's not something that I would ever advocate, but that's me being a technical guy. Salesforce, it's broken out in the last 10 days, and I think this is a level to watch. I think above 160 is a level of interest. Baidu, gap up overnight. The thing has got so much upside potential, it's bordering ridiculous. Obviously, China's been beaten to death, and I think with the news that's obviously come out, I think this week there's been more good news with Trump and the tariffs and all that nonsense that's frustrated everybody over the last 18 months. But I think Baidu, there's an argument to be had here that the stock has perhaps found its bottom, provided there's obviously not any adverse news events in the China trade talks, etc. I touched on utility companies at the start. Southern Company, thank you very much, but the run for me is now over. Broken below this trend line. That's just a signal to me to say, do you know what, let's not take any chances. A lot of my clients have wrapped up their positions in this, and that's fine. All good trends come to an end at some point, and that trend has been in play for 12 months. So yeah, with utilities breaking down, Southern Company is looking like it's going to be a bit of a victim here. So again, I wouldn't see any point in taking any chances. GoPro, I think this is one. Normally I don't look at stocks under $10, but this is one that I've been asked about, and yeah, that's kind of how I see it. I think you get a breakout above this level, I think that would be a level of interest for me. NVCR, I think this is a logical chart. I think if you get a break above this level around $83, I think there's 20% upside. So that's something to consider. And we've also got Canada Goose. Now, I'm highlighting Canada Goose, one, because I've been asked about it, but two, it always amazes me sometimes with technical analysis how eerily similar setups can look. I mean, if you look at this setup here, and then we broke down, look what's happened here. That's, if there were identical twins in charting, I think these would be it. So that's the reason why I wanted to highlight this one, because Canada Goose is now again flirting with a level in the market that you just might want to consider. I'm not telling anybody to unload and sell their positions. That's not what I do. These charts are, like I said, for information purposes only, and your interpretation of the data is obviously all on you. But like I said at the start, if you are somebody that does struggle a little bit, and maybe you want guidance, maybe you want access to a trading community, successful trading community, maybe you want access to a technical analysis program, whatever your deal is, there's probably something that we can do to maybe help you out a little bit. It began on the 1st of November. Now, as it stands, there are only 14 more spots available. Now, the reason for that is it takes up an enormous amount of my time to manage a community, manage a client base, and I'm only taking on limited numbers. So if you are out there and you are somebody that struggles, if you are somebody that's determined to just put an end to maybe any difficulties that you're having, like I said, maybe you want access to my trade ideas, maybe you want access to my client only weekend analysis, my halftime reports and so forth, and like I said, you can register on our website. And if you maybe have just come across my work, I'm Sam, and I'm registered with the CMT Association. You can Google that if you don't know what that is. But I also run honeystocks.com, super successful, super popular trading website, technical analysis, education, whatever you want to call it. But technical analysis is really what I'm known for. But unfortunately, I can't help everybody. I think if you're out there and you're really struggling and you are trying to maybe fit trading around a career or a business, then I think we can maybe help. If you want to move away from day trading, we can definitely help you. If you want better consistency, if you want to learn for yourself and not just follow others, we can help. If you want to trade with a little bit less stress, we can help to teach you strategies that really incorporate a stress-free style. Like I said before, if you want to just align with a successful trading group as well, we're very, very successful guys, career people also. There's a lot of super well educated individuals, and the really cool thing about what I do at honeystocks.com is every single trade idea that I post to my group, I log on my website for complete and open transparency. You can see that over this year, it's not been as heavy as the trade ideas from last year, which I think ran into 1,500% or something. But the one thing that I want to get across here is that you cannot initiate a position in every single stock that I post because it would require too much capital. And we have a very much a quality over quantity approach. So that's what enables us to provide such an incredible support charting to kind of go alongside your own charting. I think that's something that is super important. By coming on board with honeystocks.com, you will learn how to do everything yourself. I think that's absolutely critical to your long-term success in trading. But what I do like to do is supplement your own charting and provide you with the best ideas at any given moment in time. You can see recently I've provided ideas for United Rentals, Caterpillar, TJX, Western Union, the list goes on. But it's been a very sideways market this year, so the trade ideas have been a bit lighter than what they normally are, but still very much quality over quantity. And I don't know any of my clients that are disappointed with this number. So feel free to check that out as well. If you're out there, you're learning from losses, you're learning from YouTube, we can probably help you, okay? So just go onto our website, register your interest, and we'll get some details over to you. We don't hold a gun to anybody's head. You either want to join or you don't. It's all good. But thank you very, very much for watching, and I'll hopefully see you on the next video. Thanks a lot.